now for the Executive Edge this morning. Hedge fund billionaire Ray Dalio out with a new warning on a LinkedIn post. He says that widening income inequality and underinvestment in public education pose an existential risk for the United States as part of an essay that he published on LinkedIn titled Why and How Capitalism Needs to Be Reformed, Part 1. Part 2, I believe, is coming later today. Dalio says the widening wealth gap in the U.S. is linked to lower high school graduation rates, greater disparity in test scores, and lower teacher pay. He says the inequality problem will be compounded by increasing automation to replace workers and the wealth effect of lower interest rate policies by the Federal Reserve. Dalio calls for strengthening the capitalist system.
Yeah, read that again.
Without replacing it.
So he wants to strengthen.
He wants to strengthen
the capitalist system.
He wants to strengthen the capitalist system by investing in education, talks about or intimates that he wants higher taxes on individuals, which I think is what you're going to be hearing about later today,
here's
without giving away too much of
since we both can pick
happening.
and choose, exactly what bolsters our own position with what people say. No one's saying we shouldn't invest in education, number one. Number two, he talked about the wealth effect of lower interest rates.
Yes.
People talk about the 8 years of Obama where we tried to do all the redistribution. The one way of characterizing it by people that didn't agree with him was that he had his boot on the throat of the private sector. That caused the Fed to stay at zero, which caused the wealth effect, which the people that he supposedly was trying to help were the people that didn't have any assets, that didn't have...
I know you're religious about this. The issue is that, and I just want to...
Strengthening the capitalist system. So what do you...
Yes, what's your point? But I think what he's suggesting is that the system unto itself is not working perfectly and could be fixed. I just want to read you two facts that to me are the most persuasive about where we are in America today, okay? This is from his report. He says the percentage of children, Joseph, the capitalist system that you say is working so brilliantly, the percentage of children who grow up to earn more than their parents, Joseph, has fallen from 90% in 1970. So 90% of children in 1970 grew up to do better than their parents to 50% today. That's for the population as a whole. For most of those in the lower 60%, the prospects are worse. Okay? This is about mobility in America. This is about achieving the American dream. This is about the frayed American dream that Jamie Dimon talked about yesterday. And here's where it gets worse, Joseph. The bottom quintile moving up to the middle quintile or higher in a 10-year period, the odds declined. They didn't go up. They haven't gotten better in the last 50 years. They've gotten worse. They went from 23% in 1990, this is just in the last 25 years, to 14% as of 2011. So we can talk about capitalism. I am all for trying to make capitalism work as well as it possibly can. But to look at where we are today and say that it's working or working perfectly, I think without any adjustments along the edges, I think is misguided.
There are only so many choices for what kind of economic system that
it's not a black and white thing.
I'm not saying it's a black and white thing, but I'm just saying that you look at the history of the world and the benefits of free markets like Rick was talking about yesterday, market-based policies. The problem with a lot of this is not that the free market or capitalism doesn't work. It's that government intervention around the edges of a lot of these things is actually self-defeating. And if you just had pure free market economics, we'd probably be in a better place. And nobody knows when you work around the edges and what governments do. Governments don't always come in, decide to do something, and it helps their cause. A lot of times it hurts their cause. And redistribution in general, it will shrink the pie. So if you have a good way of taking the money that you're going to tax the wealthy, if you have some good plans on what to do with it.
There's been less regulation over the last 50 years, not more regulation. There has been less, there's been more free market rather than less free market, if you will, over the last 50 years.
And we've got,
and those are the results.